Hello people, right, I want to show you why my method is fundamentally so different than anything I've seen on the internet. In all the 15 years I've been trading, and since I sort of devised this method way back probably about 12 years ago, and have spent years trading it and perfecting it. So I'll pick a chart randomly. Euro NZD, we're on the monthly chart. Not many people trade that. I think the spread is horrendous. It is high at the moment because of 21 pips, because it's the that's the close of session. They tend to shift the spread up. It's normally about 50 pips or 40 pips, I think. Yeah, I mean, someone recently said to me, "I'll go to this so-and-so's website. He's a fantastic technical trader, price action." And quite frankly, I had a look at a couple of videos of his this morning, and it was like going back in time, 15 years to be precise, when I first opened Steve Nison's book, and which at the time I thoroughly loved and absorbed, and ever since I've been a keen fan of price action. Don't care a hoot about fundamentals apart from news times that might affect my current trades, like NFP or something like that. So, random chart. Let's have a look at some random price action. So let's go for something simple around here. And if you've not watched any of my videos before, then this could be quite eye-opening for you. So I'm going to be looking at that red candle there. Oops, what's going on with my mouse? There. And that green candle there, I think. In fact, it's going to be this one here. On a monthly chart. So what I do is I trade these reversals: high, low, lower high, lower low. And when you fail to make a newer low and you make a higher high, this is actually looks like it's gapped. Yeah, it's gapped down. Didn't notice that before, but it doesn't matter. And you carry on singing the song: low, high, higher, low, higher, high, until the high of this candle is broken. And that is what I call a candlestick trend reversal. They're everywhere. You know, here's one here: low, high, higher, low. This didn't make a higher high, so it doesn't go into the song. It doesn't matter. It's not necessarily 3 candles. It can be as many candles as it takes to break this support on the green candle there. So final high, fails to make a new high, reverses, breaks the low, and then we'd sing the song: high, low, lower high, lower low. If it closes below there, then we're good to go short. Now this is the easiest and simplest way of precision trading support and resistance. We know that candle's low is support because it's forced the price up. We know this candle's high is resistance because it's forced the price down. Same for this one. So it stands to reason the simplest way of finding the precise level of support and resistance you need to break is the candlestick's highs and lows. It's everywhere, guys. Low, high, higher, low, higher, high, high, low, inside bar. But you sing the song because obviously this is left to right movement. High, low, no higher low, but a higher high. But then an outside bar breaks the low of the previous, what I call the penultimate candle, closes, and then I always tell in all of my videos what happens when price closes above or below support and resistance. More often than not, it will go back and test it. And here's your last resistance level, support level rather. Force the price up, that's what that tail is. And then look what happened once it broke through and closed below the low. It comes back and tests it. Now that on its own can be traded too. because a monthly chart, you know, you've got price never goes in a straight line. That's a good maxim to live by. So expect a pullback, and that pullback on this particular chart was, well, I didn't need to do that, I could have just looked at the candle, 590 pips. So the open, yeah, to the open to the high. So yeah, massive, absolutely bonkers move. So that can be traded in itself. This method allows you to trade up, down and sideways. An old expression I coined, and I love it. And they're everywhere, these reversals, guys. High, low, lower, high, lower, low, pull back. Then the song again, high, low, lower, high, high, low, high, higher, low, higher, high, break of resistance. And in this instance, looks like we've broken 2 resistance. That it doesn't come all the way down to that one, it will come back to the previous one that's broken. So let's just double check all my levels here. And these aren't curve fit. There, that's that one there, it's broken it and closed it. We're talking about the green candle over here. On this one, we've got a break and close on this green candle over here. Massive pullback. Potential, it's gone up. You won't know until you go onto the lower time frames in which way that's done it. But the beauty about this system is when you go on the lower time frames, you actually use the same process again. So that pullback I talked about over here, you wouldn't enter just on the strength of hoping and praying that it's going to go back. You would enter on the lower time frame, the lowest time frame that it reverses with one of these candlestick reversals. It might even be the 15-minute time frame. And then you continue to attack the 30-minute time frame and the hourly time frame and the H4 time frame and the daily time frame and the weekly time frame until, you know, everything's exhausted, and then it starts to come back down, and that's how you get into the trade using the lowest time frames. So I implore you to watch a load of my videos and see how this stuff has come about. You know, you could look at this in any chart. So let's have a look at the internals of this particular. We'll change my mind because this is a better looking example, so it will be clearer to you. Let's have a look at this reversal here. So there's your low, there's your high, there's your higher low, there's your higher high. So we can now put support levels on candles. The low of the monthly candles, each monthly candle. Oops, don't know what's happened there, it must have snapped to the red one. This is my own script I've made myself. I'm not prepared to share it because it will go all over eBay, so just go to Fiverr or something like MQL5 and ask them to do it. Snap to the highs and lows of the candles and put the description automatically in there, the time and the level, of course. So now we can look on the internals of this, so you can clearly see what happened there. We could put one on there as well, just for argument's sake, on the red candle there, to see how far that reversed. I'll highlight that so we remember which one it was. So now we can see the internals of that, and this is where you get your swing trends from. Low, high, higher, low, higher, high, higher, low, higher, high. High, low, lower, high, lower, low, lower, high. My mouse has just played up then. So now we can drop down another time frame and we'll see those a lot clearer. Down to the daily, and now you can clearly see your trend. So when you're trying to analyse what's going to happen on the trend, you don't need to have a look at these swings and draw ascending and descending trend lines. All you need to do is look at your monthly chart. And your weekly chart helps as well, because on the weekly then you can start to add new levels of resistance, support rather. And look what happened here on this weekly. Low, high, higher, low, higher, high, high, low, lower, high, lower low. It still hasn't broken that penultimate candle's low. Lower high, lower low, and close. That's closed, so we can put one on there. And then look what's happened. It comes back and tests an old level as support. That's the true support level because it's a green candle. It's forced the price up. Massive support. It's broken through, comes back to test it. You know, this stuff happens time and time and time again on every time frame, right down to the minute. So candlestick analysis on a new level. All this, oh, we're in a range and we're doing this and that and the other. You don't have to worry about any of that. Just reversals. And another thing, look how rarely they happen. This one was one here, but because you're going on to the lower time frame to capture the retracement, and if you were going long, then you'd have to actually come back into alignment on the lower time frame before you could go long again. So this wasn't a failed reversal long, it was actually a perfectly natural movement. And then we come all the way down again, and we've done all of this and done the same thing again. This was the break of this one here, this candle here, the doji. Weeklies are very difficult, unreliable should I say, because you almost always get gaps at the end of the week. They're very prevalent, but this helps with gap trading as well, because you know you've got to close the gap, and you know you've also, that there, closing or opening, call it what you like, has broken that resistance level there. High, low, lower high, lower low, low, high, higher low, higher high. It's failed to close above that there. Then when it opens the following day, it's opened up, but the gap has been closed, which often happens. There are gap traders make a living just trading that, and then it failed to continue up, which is fine. It's on the daily, this would have confirmed down, and that would have then had to, before we could consider going long, would had to have confirmed what are called confirmed up. So you don't need any more than 3 or 4 candles to decide what way the price is going. You have precise levels of support and resistance drawn into your charts, like this. When it's closed below, you've got an old level of support there, a monthly low, that has held as resistance. What could be clearer and easier than just pure candlestick analysis? Add to it a brilliant indicator for belt and braces, and you have got, and this has got masses of ways of getting into the trade correctly. But go and look at some of my videos, guys. I don't want to overcomplicate this at the moment. I just want to bring your attention to how easy it is to trade candlestick reversals, because they are so rare. Oh, and I was talking about, sorry, I've digressed now. I was talking about how rare these reversals are, and how they can stop you going in the wrong direction, much like the evolution of this method came from 2B reversals. Victor Sperandio spent ages and ages, you know, months and months and months trading those, and then it dawned on me that the precision with how Vic Sperandio liked to trade those can be moved over to pure candlestick analysis. So I'm not going to carry on babbling on. But again, once you want to, when you want to get into the short trades, you know this has failed to the long side. Look at that, high, low, lower, low, high, higher, low, higher, high, high, low, lower, high, lower, low, close below the low of that penultimate candle. Penultimate because it's the one before that one, that's the ultimate. Fails to make a higher high, comes down, closes. Then look what happens. There's your pullback to test old support, to see whether it's fair value, whether it'll hold as resistance, and then bang, down. And these moves are massive, and combined with an indicator like this RSI histo, you have got, wait to the close obviously of the candle. We've had a gap because this is a weekly again, it's gapped up, so even better for us, it's gapped down, 130 pip move in a couple of weeks. You know, I'm only after 10, 15, 20 pips, you know, so, but when you've, the power of these reverse, mouse has just collapsed on me. That's an inside bar by the looks of it. So we go high, low, rather, high, forget that one, higher, low, higher, high, failed to break the high, so then we wait for the break of the low, and we wait for the close of the low of that candle there, the green one. Once it's done that, we're good to go. The uptrend, low, high, higher, low, higher, high, has been broken by the new downtrend, high, low, lower, high, lower, low, and this candle was the one that broke it, so we'll put a level on there. Sorry, I was going to stop this video a long while ago, but I love this stuff so much, and I know it, live and breathe it. I mean, it's a bank holiday Saturday, for God's sake, on Easter, and I'm just loving this stuff. So that's interesting. That looks like it closed below, then gapped up. The close of that candle is 215361, 2155. No, so that didn't break the low there, so it didn't gap up. So this is the confirmation candle to the downside. Look what happens there on a monthly chart. So we're already expecting this, a weekly chart, sorry. There is there is your support. That's your low of the candle that broke, rather. There. Where do we expect price to go? Support. Last support broken will be tested. That's the reversal before you continue on down. So I hope this has peaked. Someone's, oh, it's gone back to it, that's handy. So that level there was support broken by this break and close down. That's the level you'd expect the price to pull back to. Or, and this is more in-depth stuff, you have to be aware of what's way over on the left hand side, because that's more important than this right hand side stuff. But that's on other videos, and that would be a short precise video for that stuff alone. So thanks for watching. I hope this interests you. If you like it, subscribe and like on the YouTube, and if you like it on Twitter, then please retweet it maybe, or follow. Thanks for watching. Have a great day.